watching the final word this evening. Now, it of course is a decision day that we're going to be hearing about from Janet Yellen. The FOMC is going to probably postpone that plan for additional tightening of rates. That is the expected announcement tonight.
Yes, but not for long, Fatima. Fed officials are expected to leave the target range for the federal funds rate unchanged at 0.25 to 0.5%. The Fed may, of course, reduce the number of rate hikes planned in the year 2016 to just 3. Let's talk about this with Naeem Aslam. He's Chief Market Analyst at Market Trade, and Robert Parker, Senior Advisor at Credit Suisse Investment Strategy and Research, is joining us on the phone line as well. Naeem, I'm going to come to you first. Considering the state of the equity markets right now, there's bound to be some jitteriness as well, and why shouldn't there be at this point in time? What's your understanding of the American markets, the economy as it stands right now? Is there a possibility that Janet Yellen may actually go ahead and hike interest rates? What's your reading?
Thanks ever so much for having me. Yes, I mean, the probabilities of Janet Yellen increasing the rate today, they are absolutely next to none. And especially if we cast our mind at the back end of this year, or at the start of this year, the probabilities were almost faded that we are going to see another rate hike throughout this year. But now, the economic data has painted a very kind of a hawkish picture for the US economy, because of the two more important elements if you are really looking at the US economy. Number one is your CPI, number two is your unemployment. Now, the Fed have already reached their core CPI and the headline CPI target, which was for the end of the 2016. And if you look at the unemployment number, that's already sitting at there, very close to what they were projecting towards the end of this year. So I believe what she's going to do today, it would be prepping the market, perhaps reverberating the message, the one that we had towards the end of last year, that, okay, look, there perhaps not going to be 4 rate hikes, but there's going to be another 2 rate hikes by the end of this year. So today it will be all about the preparation, and it will be all about the markets to just anticipate what they could perhaps see when we will move towards the end of July, or when we are looking at July. So today is more about what is going to happen, and then Janet Yellen will be very much preparing that. So at the end of the day, I think her statement is going to be very hawkish, and she's going to deliver this message in spades that, look, the economic data is warranting us, and the only element that she could possibly play to perhaps calm those market expectations with respect to interest rates would be, okay, global growth is not as stout as many have thought. Sure. That is the only card that she can play.
Okay, and I'm just going to bring in Mr. Parker on this. Thank you for coming into the final word. What do you have to say in terms of what one could possibly anticipate as the risks that you would be watching out for that she communicates on in terms of the overseas uncertainty?
Well, I stick to my view that the Fed funds rate will be 1% at the end of 2016. Now, if you look at what comes out today, I think there is a risk that her comments may be interpreted as being too hawkish, and that, of course, would be unfortunate, because although we've had an equity market rally since the second week of February, I think it's fair to say that the general sentiment in global equity markets remains really quite fragile, and it doesn't help that, yes, on the one hand, we've got low unemployment in the States of 4.9%, we've got core inflation starting to creep up, although headline inflation is obviously lagging that at the moment. But it doesn't help that actually today we had some very weak industrial production numbers. So, for the month of February, industrial production was down 0.5%, and last month's number was revised down to an increase of 0.8%. And that actually, I think, sums up the US economy at the moment, which is very divergent. We have an economy where the service sector is reasonably strong, the consumer sector is reasonably strong, but manufacturing has been on a downtrend now for close to a year. So yes, I think they will raise rates later in the year. I think possibly the next move will be June. I think today there is a very low probability that they will take any action on interest rates, but I think the tone will be preparing the market for this gradual increase in interest rates over the balance of the year, which obviously we've been talking about now for some time.
Certainly. Now, Naeem, I want to ask you this because, like Robert is pointing out, the economy seems divergent, and at this point in time, we're seeing the equity markets, the sentiment over there fragile. Again, something that Robert is pointing out. Considering the way the Fed moves now, how do you see the equity markets in the U.S. Go from here?
Yes, I mean, I do completely agree with Bob Parker, yes. But the problem with the U.S. economy is it's stuck between the two stools because the Fed has to tread this very carefully because we are trading in an environment where central banks are playing with the other team as well. So they are not being only umpires. Let's say an analogy would be in a cricket, there is an umpire standing on your field, and then the role of the umpire is just to stand there and then let two teams play. But now central banks are very much playing at the same time and rather than being umpiring. So the Fed would have to be very careful in relation to their message, what they are going to say, because if they are coming up extremely hawkish, then we will have very much of a deja vu what we have seen at the start of this year, and that revolting and aggressive picture in the emerging market will once again emerge, and that will again come on the dashboard of the Federal Reserve Bank, and then they're going to say, okay, look, we are still not ready. I think that the global growth is something that is apprehensive for us, and then we are going to just wait for a little while for another rate hike. But he pointed out that yes, the manufacturing sector is something which has been lagging. But if you look at the numbers, now we are getting a reason for the manufacturing and the factory orders number, which are very much skewed towards the upside, and they have literally come up from the bottom, and that's because on the basis of a lower dollar. And then if the Fed is becoming very hawkish once again, and then we will see another more incrementation in the dollar.
Okay, we'll leave it at that. Naeem Aslam, Robert Parker, thank you very much for coming in and weighing in really on your anticipation of what we hear from Janet Yellen. Of course, repeatedly what one is watching out for is the balancing act as well as the level of hawkishness that both of you have mentioned. Thank you very much for coming into the final word. Still ahead on the show.
We have been trying to get regulatory approval. It has not been forthcoming so far. We will be approaching the regulator jointly again.
Ajay Singh of SpiceJet says that they will approach SEBI